I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked, the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing, or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class, and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches.
The Bitcoin ETFs have opened Pandora's box, and now there's no going back. A tsunami of institutional capital is pouring into Bitcoin, and it's now become unstoppable. This is the latest message out from Michael Saylor. Recently, Saylor shared his biggest lessons from bear markets, highlighting the importance of ignoring the noise and refraining from selling Bitcoin during market fluctuations. Despite Bitcoin's volatility, Michael remains firm in his conviction. He even declared that money is toxic, urging individuals to reconsider their relationship with traditional currencies and embrace the transformative power of Bitcoin. However, make sure to stick around to the end of the video where Saylor reveals why fiat money is toxic and why he will never sell even a single Bitcoin.
That is one of the surprising consequences. We thought that maybe Bitcoin was a competitor to gold, but it's actually run up the leaderboard, and now it's starting to nip at the heels of the S&P 500 index ETFs. If you're looking for an analogy, imagine a business without a website. It was pools of money without an ETF ticker were mutual funds. So if we look at the history of investing, we kind of went from buy the stocks individually to trust a money manager with a mutual fund, and the mutual funds made Fidelity. And then 30 years later, the ETF came along, and it was a universal API that you could use to trade a mutual fund. So in the mutual fund world, it takes you a few days or a week or 2 weeks to set up an account, and it takes you a few days to move your money in the mutual fund, and you have to redeem your money, and it takes you a week to get your money out. And so it was a very slow, low frequency relationship, and the typical investor is going to just do business with one company like Fidelity. When the ETFs came along, you could have any stock trading app, and you could trade from one fund to another fund. You could trade, in and out of funds 6 times a day. You could every day say, well, I want to buy this thing from Fidelity, this thing from BlackRock, this thing from Vanguard. And you could put those funds in the same watch list as your Apple stock or your Google stock. So it's kind of the same impact the internet had, which is, there's a retail store, there's a restaurant, what's the website? Like I want to say, let's go to a restaurant. You go check out the website. It says, this is where it is. This is how long it is. These are pictures of it. This is the menu of it. Now, imagine I tell you we're going to meet at a hotel or in a restaurant and there's no website.
Yeah.
You're like, no. Like your reaction is, so how am I supposed to figure it out? Like, well, you get on a plane and you fly there and you walk through the door and you ask for the menu and at that point they tell you what it is. You think that just seems so 20th century. So, you're laughing, but like you can't do business without a website. The website is the universal API of information. That ETF ticker is the financial API for an investor. And so that has been extraordinarily successful, but Bitcoin, it's like Bitcoin didn't have a website, right? Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something. You type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app, instant information. You can buy, you can sell. And of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone that will give me a loan. Then I have to move to Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, like, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin as or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could use it, I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors. And you really can't underestimate just how profoundly important that is to the entire network. Yeah, I think that ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created, and something like 99.7% of the benefit was for the people that didn't own the ETF. If you think about it, yeah. And once you do the math, the ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. You'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy. And then companies will build Bitcoin into their balance sheet. And then a country, and if a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. So as people embrace the Bitcoin network, and as they build applications on it, and as they invest in it, it's impossible for them to take it over, because the network outside of the new actor is actually getting more powerful at a faster rate, and it actually empowered the non-ETF holders 100x more than it empowered the ETF holder. So it's not a fear I have. I think that every single new participant just makes the entire network better and more successful and empowers every other type of Bitcoiner. I think the lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. The truth is, other people with either less information or less awareness, if someone studies Bitcoin for an hour, then they will watch the news for 1,000 days, and they will have 87 moments of anxiety during which they'll sell the Bitcoin. And so Bitcoin has a lot of those people. Like, they heard someone say buy it, and then they buy it. But if you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion. So a lot of people make investments based upon a recommendation from somebody else. And in the non-Bitcoin world, that's almost essential, because there's 10,000 stocks. Most people don't study. How many people spend 100 hours studying each of the S&P 500 stocks? Nobody. Okay, so if you own one of them, how many people spend 100 hours studying one stock that they own? 98% of people don't spend 100 hours studying the one stock. The stock analyst, the person that covers Apple, they spend 100 hours, and everybody else kind of outsources the thinking to that person and says the analyst put a buy rating on it, so I'll go ahead and take their recommendation, I'll buy the stock. And when the analyst puts a sell rating on it, they sell the stock. And that's understandable in the 20th century economy, because in a world where you have to sift through 100,000 different investment ideas to figure out what to buy and sell, you can't possibly do it. A dentist doesn't have the time to sift through 100,000 things. Okay, why do you have to sift through 100,000 different things in order to actually avoid losing all your money? And that's because the money's broken. Okay, so in a world where the money is broken, where there isn't a money where you can just buy the money and wait forever and have it go up, in that world, you're an investor and you're running your own hedge fund. And of course, most people don't have the time to run their own hedge fund, so they're the worst of all worlds. They're taking the risk of a hedge fund, but they're not putting the effort in to run a hedge fund. And even if they did, how many 65-year-old retirees, have the ability to do stock analysis on 500 different stocks? Like, I would argue almost none of them. So in this particular case, Bitcoin is a new asset class. It's digital money. Once you understand it's digital money, and you probably get there somewhere between 100 hours and 1,000 hours. Once you understand it's digital money, then you realize that the strategy is you just buy it and keep buying it, and don't sell it until you have to pay a medical bill, or until it's an urgent life or death matter where you just have to sell it. But otherwise, you just keep accumulating, and you wait for all of the chaos and entropy and inefficiency and disorder that undermines every other asset to take hold. The longer the time goes on, the more difficult and the more disorder there is, and the more people appreciate the value of good money. So I wasn't bothered by the volatility. I was just waiting, for nature to right itself. And I think that the biggest mistake you can make is become insecure. Is it money? Is it not money? Right? Once you've made your decision, you're committed, then you're just thinking if the price is low, that means I get to buy more. And so people struggle with new protocols. And so if I come up with a new protocol which is an order of magnitude better, or 2 orders of magnitude better, right? You have to migrate the institutions, the governments, the individuals, and oftentimes you have to have a generational shift. Bitcoin represents a new economic protocol, a new monetary protocol. So you have 5,000 years of recorded history during which humanity has functioned with defective money. And you didn't, and every book on economics, by whether it was an Austrian economist or whether it was a fiat economist or any kind of economist or political economist or the like, every single book was written in a world where the money was mathematically defective. And it's impossible for you to appreciate the theoretical sound money or proper money until you've seen an example of one, right? You have to see one clean money. The Austrians, the only model they had was gold, but we knew that, but you couldn't make the argument in favor of perfected money using gold as an example, because gold actually suffered or created hyperinflation in Spain, you know, in the 16th century. So someone could say, well, look, even in the gold standard, they had hyperinflation. So I guess gold's not perfect, so then my paper money is okay. So I think after 5,000 years of the billions of people all writing about politics and economics based upon defective money, it's not surprising that it takes more than 15 years from the first theoretical establishment of proper money before people start to absorb the idea of clean, sound money, right? I mean, like there's not a single PhD economist that actually went to school in the era of perfected money, right? And I use the phrase, or the example of Dr. Harvey, and he discovered that the heart pumps blood out through the arteries, back through the veins, and that it circulates through the body. He discovered that after thousands of years of belief that the blood did not circulate. And when he presented it to the world of medicine, he was castigated and rejected by every learned medical professional. And he famously said, nobody over the age of 40 will ever believe me. No doctor over the age of 40 will ever accept this. I'm just going to have to wait for them all to die. Planck said something similar, which he said, new scientific breakthroughs are never embraced by the establishment. You just have to wait for the next generation of scientists. You know, they just cannot accept the profound paradigm shift. In this particular case, you know, you can take the position that people are just stubborn, but you can also, if you want to see it from their point of view, you can say, look, we all grew up speaking the English language, and then you introduced a new language which is 27 times more efficient. Mm-hmm. But you know, I'm just too old to learn that language, right? It's just it's a new thing. The world is changing too fast. So it's like, I came from the old world. I spoke French or Italian or Spanish. I struggle with English, but my kids speak perfect English. And of course, because they speak perfect English, they're professors and CEOs and politicians and presidents. And I will not be a president or a CEO because my English is not quite good enough to compete in that economy. Was I a bad person? No, I was just in a generational shift. And now we've got to move on to the next thing. And it's not easy to turn your entire worldview upside down, inside out, even if it gives you a 10 or 100x advantage over the traditional view.
So there's Michael Saylor on why Bitcoin has now become unstoppable. With Bitcoin gaining strength and momentum, it's positioned to compete with even the largest funds in the world. But it's not just about the numbers. Michael's recent insights offer valuable lessons from bear markets, emphasizing the importance of staying steady amidst market turbulence and resisting the urge to sell during downturns. His bold declaration that money is toxic serves as a wake-up call, urging us to rethink our reliance on traditional currencies and embrace the transformative potential of Bitcoin. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.